It's Tuesday, the 20th of June, 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's jump straight in. Story number 1, the local share market hit a 6-week high yesterday, with several large cap companies regaining favour at the end of a pretty strong financial year for equities.
The Commonwealth Bank pushed back above $100 a share yesterday after rising more than 1%. CSL, which had been sold off hard in recent sessions, jumped a couple of percent, while stocks like Wesfarmers and Woolworths have found friends. As we head towards the end of the financial year, the S&P ASX 200 looks like ending up around 12% for the period, barring any sudden movements over the next couple of weeks. Industrial Group Goodman, Woolies, Wesfarmers, Fortescue Metal Group are all up around 20%. That's a pretty good year. The standout over the past year or so, among the large caps at least, has been the tech stocks. WiseTech Global's up 120%, Xero 60%, REA Group's up 45%. Other strong performers have been QBE Insurance. It's been able to push through higher premiums. Pallet maker Brambles has had a good year too.
Sean, as much as we love it all to be good news, that's not the way it works. What are the companies that haven't done so well?
Well, among the large caps, it's been the big materials and energy companies that have underperformed. Santos is lower, BHP and Rio have underperformed. Perhaps the surprising underperformer has been National Australia Bank. The 2 worst performers among the top 200 this fiscal year are household names. The Star Entertainment Group has struggled after a multitude of inquiries made findings against the gaming giant. Its share price has more than halved. And Domino's Pizza's shares are down 25%. Hurt by slowing consumer demand, higher ingredient costs, and a slowdown in new store openings. Plenty of reasons for all this. Some are stock-specific. The Star's a good example there. Some are sector-specific. Energy prices have really come off a long way. That's hit the energy companies. In other cases, rising interest rates should help. The banks are a good example of that. Other cases, they will hurt. The real estate investment trusts are an example there. Then there's the slowdown in household consumption and the slowing of the economy, a disappointing post-COVID recovery in China, a rising housing market here, an AI-induced surge in tech stocks. Plenty of reasons, Michael. Bottom line, been a pretty good financial year, really.
Yeah, sounds it. Sean, on to story number 2, and big news out of Canberra. The bill to authorise the voice referendum passed the Senate yesterday, kicking off 4 to 5 months of national debate on the issue.
The bill passed 52 votes to 19 and the referendum must now be held within 6 months. The most likely date is October 14. According to political analysts, Prime Minister Anthony Albanese said he wants a respectful and fact-based debate, though he said he still expects misinformation to spread. Albanese said the vote is about who we are as a nation and that it will be a moment of national unity and a chance to make the nation even greater. Liberal MP Julian Leeser, who quit his job as Shadow Attorney General so he could vote for the voice, said it's important for people to be informed ahead of the vote. Couldn't agree more.
Sean, story number 3, Jetstar is rethinking its international network, adding 500,000 seats to routes out of Brisbane and axing flights from the Gold Coast.
A $200 million Queensland government support package encouraged the changes. There will be more flights from Brisbane to Tokyo, Osaka, Seoul, Bali and Auckland. The Queensland government last year set up an aviation investment fund designed to help the industry recover from COVID and to attract new international routes from Brisbane. Now, speaking yesterday, Jetstar boss Steph Tully acknowledged the deal offered by the Queensland government and Brisbane Airport Corporation. In contrast, a representative from the Gold Coast Airport, which is the big loser from all this, wasn't quite as happy, saying it's very disappointing.
Sean, story number 4, anyone along the east coast and in the west of the country knows, of course, that it's getting a bit colder, which turns the minds of some people to skiing. And notwithstanding the cost of living crisis that's going on at the moment, sales of ski passes to some of Australia's premier snowfields and alpine resorts, well, they're booming.
The Epic Australia Pass, which gives skiers access to Perisher, Hotham and Falls Creek, as well as resorts in North America, Japan and Switzerland, and costs more than $1,200, has posted sales growth this year, or at least in the lead up to the start of the season, of 16%. According to the Australian. German discount supermarket chain Aldi, which is the single biggest retailer of ski and snow gear in Australia, has just finished a highly successful snow gear sale that beat companies' expectations. For Australia's $2.5 billion ski and snow industry, the strong ticket sales is very good news. It'll be a huge relief after years of cancelled or slower ski seasons due to the COVID-19 pandemic.
All right, last one. Story number 5. This is a bit of a worry, Sean. There's been a surge in so-called early onset cancer in the under 50-year-old age group. And it's so significant that some epidemiologists have suggested that it should be called an epidemic.
Financial Times analysis of data from the Institute for Health Metrics and Evaluation at the University of Washington School of Medicine shows that over the past 3 decades, cancer rates in the G20 group of industrialised nations, that includes Australia, have increased faster for 25 to 29-year-olds than any other age groups. Rates for 20 to 34-year-olds in these countries are now at their highest level in 30 years. In contrast, cases in older age groups, those over 75 years, have declined from their peak about 18 years ago. While there's no definitive explanation for the shift, there may be clues in the types of cancer hitting younger people, with colorectal cancer up 70% over the 30 years among the 15 to 39-year-old age group. For that group, there's also been a big jump in nasopharynx, prostate, kidney and thyroid cancers.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 20th of June, 2023. Remember to hit follow on the podcast, and if 5 minutes isn't enough for you, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.